All right, welcome to Daily Investing Analysis number 24. If it's your first time watching, welcome. Always a pleasure to have you on, whoever you are. And we're going to start off by looking at the trading view charts of all the prices. So the total crypto cap still fluctuating downwards a little bit. We had the John Wick here at John Wick 5 at the bottom, and this happened a couple days ago now. This was just I guess the tariff sell-offs. I don't really understand why. It was really stupid, like the COVID crash and like not the FTX crash. That money disappeared, but the COVID crash, it was pretty bad. But see, we've came back up, and it seems that now we're entering some sort of downwards grind. I wonder how long this continues. If it continues into the rest of February, and perhaps we see our uptrend. Of course, my reasoning for the uptrend and the bias for it will come along as we go. Need to pull up an extra indicator here real quick. Forgot to pull that up. All right, let's go back to the charts. We're going to check others down as well. Be interesting to see that. Uh, Federal liquidity. What do we have here? Yeah, so we had an end of the month nuke in Federal Reserve, or in the federal government's liquidity pool, but it seems to have reverted since then back up. Whether or not this is a stable uptrend, I don't know. Can't really say, because I think as we speak right now, the Federal Reserve has expended all of their extraordinary measures besides draining, no, besides draining the Treasury General Account Balance, the TGA, and something else. Don't know what the other thing is. It's not important. Now, the reason I care about FedNet liquidity as well as global liquidity, which is back down again, interesting to see, is because global and Fed liquidity is a significant driver of cryptocurrency and Bitcoin price. Because as you know, liquidity goes up, that's more money for the markets. Let me fix my mic real quick, and that brings more money, out of bonds into stocks, into or like precious metals, and eventually into crypto. Huge amounts of money flow in, and we want it to trickle down the ladder. Right. And in order for that to happen, we need liquidity to go up, which means lots of money in circulation in the global economy. And also interest rates come down. People talk about that a lot. When interest rates go down, we actually end up seeing something like a lot more money that lenders and loaners and people paying debts have to spend. And a lot of people tend to go invest in things. And when Bitcoin has a hot narrative and, it's trending at record prices like near 100K, perhaps it gets a lot of attention, which we love to see, as always. That's checking for the altcoins and just the major tokens, I suppose. Yeah, Doge looks exactly the same. Solana hit pretty hard. Ethereum, interesting to see how Ethereum's doing. I actually have some things to say about Ethereum later. Bitcoin, it's actually holding out the best out of anything. It must be nice to be holding Bitcoin right now. Let's see, Link. Link got hit pretty damn hard, but it bounced back up significantly. TRX, nothing bad. I mean, what is that percentage? Yeah, that's not bad. Link lost like what? What did Link lose? Yeah, way more. TRX, what did it lose in percent was? Let's see. A max of 17%, and then what did Bitcoin lose? 10. Yeah, so like TRX and Bitcoin were probably the safest ones to hold. SWI is looking weak as well. WorldCoin is in the gutter. It's actually kind of comedic how no matter how much technical analysis you have and what it tells you, you think, oh well, we've been at this range, we this is the absolute bottom, and then you get a flashpoint down to like literally, this is the lowest the price has been since launch. This right here, this is like 99 cents or something. This is actually the low. It reached its lowest possible point ever since launch, which I find incredibly significant. Okay, let's see. What else is there to look at? Ondo, that one's interesting. That one had a really hard time. Yeah, I don't know. It's just funny to me. I didn't sell anything. I never sold a single asset during this crash, but everyone did. It almost looked like some kind of bid to wipe out all of the degens out of the market. Okay, we're going to go to the liquidation heat maps next. Before I do that, quick plug. You're watching on this channel, Alpha Investor 123. So there you go. And right here is my paid group. My paid Discord group is very cheap. It's only $5 a month, or $10 a month if you want more perks and Telegram access. See, here's the server right here. And we have a few guys in here. We're very active. We got a strong community. I try and keep it quality over quantity. So, you know, when you get in, you don't just get in for free. You have to pay, but you also got to show that you're willing to just provide value, to add to the experience, not to waste time and to just leech off of signals. But I only want high quality individuals. If you think you can provide value while also willing to learn from us, we're all willing to learn from each other and teach each other, then this might be the place for you. If you like the analysis you see and want to learn more about it, definitely the place to you. That's the place where we can connect and you can reach out to me. So, will these maps load? Maybe not. CoinInc is notorious for not loading. 1 week. Okay, nice. Yeah, so take a look at it. So what we had here was, for a long time, we were sitting here hovering at this price, and we had major liquidations in these zones all the way down to 95K. We were very concerned about that, and it got liquidated, and we immediately shot back up in response, but we didn't quite break to this 100,000 level and beyond, or really past 102,000. We've come back down, and we're kind of grinding downwards, it seems, and there's a lot of long liquidations down here that it seems to me that we have a bit of a downside bias right now in the short term. However, who's to say perhaps a lot of short liquidations open up above price, and we get another cascade, and we push up into 110K towards the end of the month. Of course, I think that would happen after we do another dip, but it would be slow and progressive because these liquidations are not as hot as they were. Now you're thinking, well, what are you talking about? What are you talking about? Just look on the left here. You can see that the lighter the color, the hotter, you know, the more concentration of liquidations, the more money that gets liquidated at a current price, or where, you know, positions have to close. And you can see that this was very hot. This is also very hot. You know, the hotter it is, the more likely prices to go in that direction. But also proximity in terms of how close is important too. Be interesting to see. Can we get a more short-term outlook here on the 3-day? Okay. Oh, there it is. All right, yeah. So yeah, that's tough. You know, we got this distance here. We got this little distance here before we get to short liquidations, and we got basically the same distance until we get to long liquidations. But the long liquidations are a lot more dense. It looks to me like we still do have a downside bias in the short term. We'll see what happens. Very interested to see what happens with that. Not really. I mean, price action right now is all noise. We have no liquidity necessarily, you know, although we have a lot of bullish situations. Like we have massive institutions buying up lots of Bitcoin, lots of Ethereum, especially the Trumps and World Liberty Fi. They're buying a shit ton of Ethereum. And what happens is we get a supply shock. If you understand supply shock theory, then you know what I'm saying. If you don't, basically, they're buying up all the supply but off chain, which is why the price isn't reacting. So when a bunch of people in retail and, you know, money from global liquidity rising, when all that stuff starts to go into the market and try and buy Ethereum, Bitcoin, all these other majors and all these coins, well, there's not going to be enough for everyone to buy, and the demand is going to go crazy, and the price is going to have to go up an insane amount. And the supply shock, like eventually, the realized price, in a way, is a way to look at it, not really, but where price should have been by all of this Ethereum and Bitcoin being bought is going to be reached very quickly at some point, and price will go up like crazy. That's what a supply shock causes. That's what we're interested to see. So the leadoff morning note from 42 Macro is something I'd love to look at here. It's worth the money, in my opinion, but in the server we don't. People who are in the server $5-10 a month don't pay. It's your benefit, and of course you don't pay to watch it here on Investing Analysis, but we have seen that inflation is on the downtrend, and so is inflation is on the downtrend, and so is deflation, and we seem to have reflation going up and Goldilocks reflation going up and Goldilocks as well. And what we want to see is Goldilocks and reflation together. This positions us for a hyper bull market in terms of the economy, and I really like to see this. Now, what we're waiting for is for both of them to get up in like this kind of range, like we see right here. We're kind of in the infancy stage here. We're kind of like down in here. That's where we are with this. They're low. But once we get up there and get kicking, who knows what'll happen. That's one thing to look at. Let's see. Where's the next page? Next page. Okay. Nope, not that one. 43. Okay, yes. So the weather model for Bitcoin. I don't know if you can see it there, but if you look closely, if you look at the sliver there, it has been going red for a little bit. For about all of January, really, like right here. And it just flipped neutral a couple days ago, if you can see that yellow, which is indicative of the weather model flipping bullish and us going up, having a strong uptrend. Now, my reasoning, of course, you could tell, if it's red and then goes yellow, obviously it's going in the direction of green, and then vice versa. If you can't tell, so it could just go back red, it could stay neutral, or it could go green. Who knows? Let's see. You're gonna have to search up for the VAMs here. The VAMs is another one that I'm interested in with 42 macro, because I would say that it is it's a good indicator for trends, but it really does a good job of just finding a probabilistic range of current price by the day. Here it is. Yeah, so we can see that it's still in a bullish state, and perhaps we'll have an extended bullish state like we did here, which means we're almost halfway through, about a third of the way through, if that's the case, because bear market phase is harsh, and we really just had chop neutral phases like this. We'll see what happens. But if we zoom down to the bottom here, we can see that the VAM's adjusted range is now at about 96, 97K for the bottom, and the top is still above 110,000. Price could go in either direction, but as we saw by the liquidation heat maps, we look like we have a bias to the downside. What we're looking to see here is if the VAMs continues to drop down, or if it holds strong in terms of its bottom range, this green dotted line. And for Ethereum, if you're wondering, Ethereum, the floor is, hell is the limit for Ethereum. But once the supply shock hits and people start buying and there's a little bit more trust into it, it's going to explode. It'll do really, really well. All right, that's it for that one. Now, suppose we're on to Twitter now. Yeah, we'll get on to Twitter and then, Twitter. Okay, so Lawrence Leopard. Okay, so this post was interesting to me because he was pointing out how the U.S. debt maturing situation we have here, the government's and interest debt is at over 10 trillion. Like, this is 2025, 2026, like right now. This has to be refinanced and paid off and dealt with. And what has to happen? The money printer has to come on. The liquidity has to go up. The TGA has to get spent down. A lot of factors have to go into place, which mean, and by the way, all this stuff and debt refinancing is bullish for risk assets. More money in the markets, more money gets, money thrown out to the economy, more gets invested. That's what we need. This is massive for us. This has to get taken care of. They can't just default on it or anything. They're going to take care of it. They're going to refinance. They're going to print. We will get it. It's just a matter of time. Time is ticking right now with this. We had a post from Thomas on X, Thomas on Markets. This is a guy that I really I like following his posts and everything. He's got very good analysis, very good indicators, and he basically goes into his a whole. I'll give you the TLDR. He says the business cycle is turning up, and this could be very good news for risk assets. And he's basically saying that it's the PMI indicators what he's using for this to monitor it. And he's also saying that one could argue that it is tariffs, Trump's tariffs, forcing domestic production and manufacturing back to the U.S., which is causing this. Kind of possible, but what we care about is Bitcoin here, and we can see that as the ISM manufacturing PMI, right, trends upwards, we can see Bitcoin trend upwards. And whenever it starts breaking and collapsing from that uptrend, Bitcoin crashes. And we can see here, comes up, breaking and crashing, crash, break, crash. And we see it grinding up slowly, very slowly. and Bitcoin grinds up slowly in terms of percent change, right? Now, we just had this massive breakout here from contraction to expansion. Okay, and what we're looking to see is if this comes back down or if it sustains upwards. If it sustains upwards, I mean, you can see this correlation here is, as he says, let's see, he says comically clear. Bitcoin historically performs very well when the PMI is above 50. You can see here the value on the left. The PMI is above 50, which, according to him, marks the difference between contraction and expansion, which we can believe because of how, how price goes up whenever it's above here. It's just clear. You can see the trend. But keep in mind this 50 point here. If it sustains, because it did tip above that in early mid 2024, but it was a false signal. But now we're up above that by a lot, and this could be a huge trend we're looking at here. Maybe not a perfect giga candle, but we're looking at something there which is very bullish, very bullish. And Trump, if tariffs are ultimately the catalyst for this, Trump will continue to use tariffs, but it'll also really just a strong arm policy mechanism he has in order to get countries to change the deals that how they're ripping off America, and make the deal and everything make deals and trade deals more favorable for America. This also sparks more manufacturing jobs, like I said, in the country. Over the next couple of years, we could see a massive increase in the manufacturing ISM. And that will definitely be bullish for Bitcoin. More money will be in the markets everywhere. Everyone has more jobs. If he takes away income tax from the federal government, even by like 20%, everyone gets even more money in their pockets, more money to invest. The Goldilocks and reflation model from 42 Macro will continue to trend up, and everything looks super bullish. We just need Trump to survive and to follow through on, Trump being Trump, which we can be pretty sure he will, because he is a man of his word, love him or hate him. But what's interesting is that he made a point about the S&P 500. The S&P 500 is so far ahead of the business cycle. Is this time different? And this has actually happened before. And the point he makes is very interesting. The last time, because usually there is a correlation, you can see it matches up very well. But right now, the S&P 500 is ahead of the business ISM model. Last time this happened was in the 90s, before the dot-com crash. And Thomas actually points out here that perhaps we're having a similar situation, a repeat of history, but it's for the AI crash. Let's see, where does he say this at? Yes, so right here he goes, could we be repeating something similar, but replacing the internet with AI? Right? And there's another previous situation, right? And it was around 1989 to 1990, which we don't really, there's no real correlation to check with that. But let's see what he says for that. I did not read this part. And then the world revenue news sank into a fairly mild recession in the late 1990. In this scenario, we would currently be around early 1990, several months before a garden variety bear market, 20% fall in Zealand. Okay, so he's calling for two scenarios here, really. Before maybe we'll have a 20% dunk in the S&P 500 around there, or we'll sit in a situation where we're actually about to go up a lot into AI infrastructure being well built in America. Because that's another thing, the DeepSeek crisis, which is fake, by the way, fake news, is causing more AI development from a bunch of big tech companies and the government. Perhaps we have an AI crash after everything goes ballistic, just like we had a quantum computing crash. That was very interesting. So that's it for the Thomas post. Marty Party, another guy that I think has very good posts. He made a good point that the White House crypto czar David Sachs, he says the first priority is stablecoin legislation, which basically he goes on to say that any platforms, blockchains, exchanges that are prepared for scalability and holding lots of stablecoin reserves are going to do great. They're going to grow the most. And a lot of companies with credit cards or like banking companies are going to struggle because they need to compete with the stablecoin revenue and the incentivization of. So a lot of people are going to start letting their credit cards being used to on-ramp your stablecoins. And it's going to be interesting to see how banks will have to adapt to the upcoming crypto revolution that we're currently living in. Very interesting times. So we got some data from Bitcoin Data 21. Another good source. Could be humorous at times. But he said Operation Liquidate the Plebs is complete. The last few days have shown the manipulation that takes place in the market. The crypto sector is not free of TradFi scams, regardless of being decentralized. If they could turn off the buy button on certain stocks like GameStop, even with regulation, then it's all one big casino. Yep. And yeah, it's very funny. Because crypto is a casino. You can see tariffs. And then we get a 36% drawdown. This is in the altcoin market cap. And then we get these, with these tweets, 2 billion lost. And then Solid Intel says that Trump's AI and crypto czar, David Sachs, press conference. Trump confirms delay of tariffs against Mexico. Bullish again for crypto. Trump signs an executive order calling for the creation of a sovereign wealth fund, and then even more bullish. Love how the news manipulates crypto so bad. If there were people if everyone in crypto was similar to my school of thought, I mean, the market would probably be super bullish or would have sat still through all of this. But it's easy for me to glaze myself, right? Let's see. Marked Quant, another guy that I found on here that actually has really good systems development. I really like his work he does. But what's interesting to me is not that the Bitcoin bull bear trend, long-term trend system is bullish, right? At 0.82. He has I think what this is a strategy with a bunch of indicators that are finely tuned on TradingView, and it's oscillating between bullish and bearish, and of course yellow is neutral. But what's interesting to me is his Ethereum, actually. His Ethereum trend direction, his long-term trend direction is super negative. And I don't think this, because based on how this looks, I don't think this accounts for a supply shock theory where, like I mentioned before, right? You know what I'm talking about. How would this system react to that? I'd be interested to see his updates on this, because if his system, thinking about all the Ethereum that's being bought, is obviously not an input into this system. Or if it is, it's not weighted near enough, because honestly, anyone with a long term, not a medium or short term or swing trade term, but a long term trend direction for Ethereum, I would think that you would be a lot closer to below, at least above negative 0.5. You maybe even neutral in this range. I wouldn't give it a positive, not that much bias, but I don't think what we'd see is something like, we would just have a flash reverse nuke up into the green, and suddenly it would be like long-term, long trend, or long bullish, whatever. I'm just curious to see how this trend will handle something like supply shock. I mean, clearly, if Bitcoin receives a supply shock, it's already factored into the indicators used here, because it's almost max bullish, and a supply shock would only make it literally maxed out 1.0. But it's so weird to me how this would react and how it would even work, and what indicators he has in here and how they're weighted. But nonetheless, a very good job, and I applaud him for his work, consistently posting every day. And this last post I saw by Pentoshi, I thought it was interesting. Leading real world assets, Ondo checks C-Pool OM. Ondo is one of the bigger ones. Have it on here. This one, perhaps, I honestly think, not to set price targets, because we can't rightfully in our right mind set any price targets or have any expectations like that. However, because you never know what things will go. But there's a lot of people calling for like $10 Ondo. Could happen. But if BlackRock wants this tokenized, I don't know. I think if we change this to, can we change this to market cap on here? I don't think we can. I'd have to look it up. Let's see. This indicators. Yeah. Ondo market cap. Is this right? I think so. So it's possible to see these crazy returns we're talking about here. But to have a 6x, right, that would be up here, and it'd be like a $33 billion market cap. I really think someone like BlackRock, if they get involved with Ondo, which it seems like they are, and gets it tokenized, BlackRock's money alone should be like in the hundreds of billions, I would think, or close to that in the aggregate, which would really give Ondo like a 22x at least from this data. I mean, this is really just speculative. None of this is legit or anything, but it could go anywhere. Not to a trillion, not quite, but I could see it hitting near hundreds of billions in market cap, which would be huge for people who are hodling this. Let's see. Okay, I'll go ahead and get off the page here. So what did I want to pull up on here? I don't think I did, but we do need to go check the liquidity. found this liquidity dashboard. It seems by someone named Fiji, but we can see that Fed liquidity, right here on the left, trended down for a while into the end of the month, and as soon as we hit February, trending back up again. And we can see the TGA closing balance. We want this to go down, but it's kind of gone up a little bit in the last couple days, unfortunately. But another factor we need to consider is the RRP, Treasury Securities Sold by the Federal Reserve, or overnight reverse repurchase agreements. That's what they are. And this trended down. So this and the TGA going down is bullish for Fed net liquidity and bullish for risk assets. So that makes sense. If you want better explanations and all the secret indicators we use and everything, the paid server. The link is for here in the channel bio and in the description. You can join and we can immediately start talking. But yeah, that'll be it for this one, and I'll see you in the next one.